back and better than ever. I've been off for the last couple of days, you guys, just taking care of family business as we talked about earlier. So that's why I've been a little less on the live streams. But here we are again, and we're going to be talking about some super amazing stuff today, guys. Bitcoin versus the US dollar, what's going to be happening in the near future on these two huge, crypto is the biggest thing. Bitcoin's the biggest thing in crypto, and then the dollar, obviously the dollar is the biggest thing in fiat currency. So they're kind of clashing and battling right now, not necessarily in the overall perspective, but generally where the safe havens are going to be in the near future, what investment banks, what institutions are going to be looking to go in towards. So first off, I want to be talking about inflation, because inflation is a huge thing that a lot of people don't know about, or they know about, but they don't know the dissecting and the full description of what inflation means. So essentially, inflation is when price is having. So when you have an inflated price, it means that there isn't enough. The value of price, or the value of whatever currency is over. It's been overly amplified, meaning that when we have, say that you have if there's a product market and you have something that is there's a lot of, right? That means that it's an inflated product, meaning there's too much of that product and there's not a lot of people that want it because it's been overly marketed, or it has too much in the market. So that being said, the US dollar, right, the inflation on the dollar is that when you have the dollar inflation, meaning that we have these interesting things called interest rates. The reason why interest rates are established is because it monitors inflation. It monitors just the economy's strength, and it monitors the overall adjustments of how the economy should be stabilized and how the market should be able to be in the fluidity or have its market turns, right? Like we said, there's different type of markets, right? We have a surplus economy. You can have a recession, a depression, and you can have basically a stimulated, right? Like in 2012, we had the stimulation of the economy where a lot of banks and institutions push market, right? Priced in a lot of market price, or priced in a lot of our key market structures. Like they basically put trillions of dollars into the market so they can stimulate the economy. And then after that, it's supposed to be working on itself, right? Having a self-driven economy. So what exactly that inflation does, especially back in 2008, right? Our inflation was really high, right? That's why we're at 8% interest rates before we had that crash. So 8% interest rates, 9% interest rates, we have to take that accumulation with the average month or the average yearly household income, because when inflation is really high, you usually have a high yearly income for the overall universal yearly income just in general. So that being said, in 2008, the average income was about $102,000 a year, which is very, very high for the average income, right? It should be that way. Just everybody should be have access to making $100,000 a year. I mean, that's just basically what we need to live off and do extra things nowadays, right? $100,000 isn't a lot of money in nowadays market, and due to inflation, right? And I'm going to give you guys a total scripture on how this inflation has been factoring in, and how the dollar has been digressing since the 1800s. And I'm going to give you guys a huge picture on that. I already have a document already written out for you guys, so I'm going to be going into that. But I just wanted to give you guys the gist, and I wanted to welcome back everybody that hasn't seen my videos or is new to my videos. My name is Brenton Walker. I'm the lead Forex trader at Traders Profit Club. I've been trading Forex for about 6 years. First year was more so studying, then I got into binary options. Then after that, I got into Forex full time, and I've been trading ever since. I've been able to make people thousands, hundreds of thousands of dollars. I've made courses for big companies. I still consult with companies and so forth. So I've been in the Forex game and studied for about a long time. I do a different type of strategy, right? I'm also a psychological trader. I look for psychological levels. I look for market support and resistance. I look for breakouts. I'm a continuation trader and a reversal trend trader. And I look for nice areas where proprietary investment bankers trade, and I made a program called Market Maker's Handbook, which essentially goes over how proprietary traders, investment bankers trade the market. So for you guys that are new, please subscribe if you guys want to see more of my videos, and put on that alert so you'll be able to see me make my live trades and my live streams. So and we're going to be going into live trading. I wanted to make this probably the last day we go into this dissecting the market and going over that. Like I said, you guys, for you guys that have already been in the channel and already seen me trade and so forth, you guys know that my trading style is a little different. I'm trading London session and late Sydney session, so I'm trading later in the night, but I do try to get my trades early in the morning, or I like to trade during this time. But 10:30, 11:30 is when New York session tries to have its basically there's less volatility during London session, or excuse me, New York session going into Tokyo session, or that mid-grade where there's no sessions in general. It's just basically a flat line. So I don't really try to put my entries there. I like to put my entries earlier in the morning, excuse me, or late at night, just because then the volatility spikes up correctly, unless I see a really nice position, especially if I see a position happen at 4 o'clock in the afternoon and so forth, where I do put it on the trading signals. And for you guys that have been watching our trading signals, you know, Naeem killed it last night. He had 2 nice trades on the Great Britain Pound JPY and also the USD JPY as well on a short-term gain, 20-30 pips. I've been holding my positions. We just closed the Euro USD trade last week. We made 70 pips on that. I'm also still up on our USD JPY. We got in at 108.500 and we're already down at 108.196, so we're about 30 pips up. We're trying to close at 107.500, but we're going to go into that in this future video. So that being said, you guys, that's just a recap. If you guys are new, great to see you guys. I'm going to be also answering any questions in the live stream. If you guys have any questions, please feel free to put in the comment section. I'll be looking at those as well. So moving forward, we're going to be talking about market price. So inflation. So here I have a document that I made for you guys, or previously, that I want to be able to share with you guys. Let me just get it up open for you guys and so forth. So that being said, I'm going to try to actually go into it like this. So inflation, US dollar inflation rate. Okay, so according to the Bureau of Labor Statistics Consumer Price Index, the dollar experienced an average inflation of 2.15% per year. Price in 2018 is 2,765% higher than it was in 1860. Okay, so this is when we're talking about inflation, how inflation basically it's a factor that every fiat currency has to abide by, because since it's a fiat currency, it's based off perception and is based off determining factor of overall percentage of human psychology as to they like conform to whatever currencies is stabilized for their merchants or for their purchasing power. We have to take in consideration that is based off a human biological wave point. So this factor in is that the monitor factor of price being considerably strengthened, right, or decreased. The dollar has decreased, but the inflation has increased, right? The stimulation has increased 2,765% since the dollar was established, right, when we've been able to give it paper-based value. So the current inflation is 172. That's obviously higher now, you guys. This was previously, we're obviously now at 225 now, going up to 250. And the current, so this is what inflation does, okay? So 2,765% has been going up since we have established the dollar. So as you guys can see that every year the dollar is losing value, right? It has to. It's a fiat currency, right? There's no structure behind the US dollar, period. It's basically the government showing you that this is, well, basically force feeding you this fiat currency and then having you to stabilize and structure it as the norm, right? And we'll go into future historical structures and how this, you know, since the 1600s, right, when the first person established the fiat currency, which is a Swedish man, he basically made the the factor is this market. Let me see. Yeah, so the market is structured. We've already been stabilizing and going into market structure and having this availability, right? Then that's why price and market hasn't been able to amplify over time, because the inflation has been actually decreasing over the decreasing factor has been going over time, right? So when we see price, we're looking for a determining factor on where price is going to be in the future and how it's been in the past. And that's why we have those leading factors like CPI, Consumer Price Index, GDP, and so forth, that these are factors in on how price will be navigated throughout the year, right? So So now that they have an understanding of what price is, now we'll go to the political attributes and how factor in price and how it will dictate in the near future, okay? So the congressional budget forecasts to return the $1 trillion deficit in 2020, right? We've been trying to return this deficit and working our best to, obviously, Donald Trump has been doing the tax cuts and the law of last year to basically have a stimulation, but to increase it so we can pay back our $1 trillion deficit, which we haven't been able to do because the CBO said the deficit for official 2018 would totally reach $804 billion from $665 billion in the last year, right? So in 2019, the agenda said that the shortfall will total to $981 billion beginning in 2020. However, the CBO said deficits would exceed $1 trillion a year. The project's deficit official 2018 and $242 billion larger than the shortfall an agency projects in June. The U.S. last ran a budget deficit of more than $1 trillion in 2012, right? So this is where we're trying to basically that 8-year cycle, which I like to say the 7-year cycle, since we're in 2019 now. So that 7-year cycle where we talked about in market cycles happen. In previous videos, we talked about this is basically how the market cycle happens, where we have the takeoff 2012, 2013, 14, 15, 16, 17, 18, and then we see price coming down up into the new paradigm, 2018, 2019, 2020, and then boom, have that retracement going into that next cycle, right? The 7-year cycle is what we use to fall on. So as you can see, price now, we can go to the US dollar. We can considerably see the same thing. So we can go to price right now, go to the USD Japanese yen, right? We can see price doing that same affirmative action that we saw previously, where price has formulated the same thing, right? 2012, 2013, 2014, 2015, 2016, 2017, 2018, and then how we see the 2019, we go into the same thing we talked about in this, where then the 7-year cycle has now confirmed a familiar aspect on how price is now determining the same reoccurring factors, right? So that being said, inflation has a huge part in this because inflation is determining the factor of the strength of the economy. With high inflation, we're going to have high interest rates. It means jobs will decrease. It means that we're going to have a lot more unemployed, and then we're going to have a lot less stimulation because when we have more interest rates or more higher interest, that means that banks are going to stop letting companies loan, and even personal loans. Credit cards are going to spike up higher and interest rates. We're going to see cars, the ARP, their interest rates are going to go up higher, and so forth. Everything has to go up because they have to adjust to whatever economy that's being distributed. And the fact is that the economy that we're into right now, we're obviously in a surplus, or not a surplus, a stimulated economy, right? Where we had price being pushed up, propped up after the crash of 2008. We wanted to price back in, where then we had that, like we talked about, that $1 trillion deficit, where that $1 trillion deficit was where we established in 2012, right? So 2012, we saw that surplus, we saw that gaining of price going up into 2012, and then after that, price then was moved to the downside, and then we priced back in. We saw price move up to the upside once again, and then we saw once again price then is going down because we're not factoring in all the understanding of what price is going to be because of high inflation, prices is going down, and so forth. We have to see it across all the boards. With the US dollar, the Treasury is going to test these previous highs. After we see that, we're going to see price start to go to the downside, which we can already see an over-justified optimistic standpoint from the stochastic side, or the RSI. And then what we're going to see is that these wicks are basically showing that there's exhaustion of the market price, where then we'll see a return to the norm, which then we'll start to see, and this is the U.S. Treasury bond. So if you guys don't know what the U.S. Treasury bond or the 10-year Treasury bond, it's exemplified into understanding where price is going to be determining. When you have a high yield or a high Treasury bond, then you're going to have basically a bullish market. When you have a short or a low Treasury bond, that means you have a short dollar, right? But we take this into consideration because then this is the polarity aspect. You calculate this into formalities and to see where price is going to be able to determine in the near future. So where we see price going into the near future is that we see a short. We're going to probably see the extent of maybe testing previous to 2012, where price then had that drop, where we can see that that's what exactly price the 7-year cycle shows. When we put in that same 7-year cycle graph, we have that return to normal, we have that bull trap. Right here we can see that that's where we're seeing that stimulation between this area. We possibly might see a spike to the high, but we already saw that right here that was a spike to the high, where then it was that return to normal phase as we saw here. And then now we're going to see that drop to the downside, where then we're going to push out all those buyers, right? The market for the last 7 years that we're buying, we're going to start to have that correction to the downside, where the market will then have that formality when it comes to structure, right? So with that being said, you guys, we are looking for, since we have that, this is the availability of where structure and historical data has been proven to show that it repeats itself over and over and over again, that now we can see that price is going to value itself totally different than it was than we saw in 2012. So that being said, this is the inflation. This is where we see that price is going to go in the near future. And then this is where the capitalization, we're going to see the capitalization between 106. This is where the capitalization area will be formulated. And that's where price will be now structured, right? So that being said, you guys, we're going to start to see that downwards trend in the US dollar on most pairs, where then we're going to start to see the Euro USD. We're going to start to see the upside to test that previous high to make that M formation. And then we're probably going to see the same thing happen in 2008, where price then went also down as well in 2008, where price then had, or this is not 2008, excuse me, 2008. Whoops. Right here. So that price correction in 2008, we're probably going to see the same thing again, where that price correction is going to happen once again to that downside, because the US dollar and the euro dollar usually have a compatible, like, if the US dollar, Japanese yen is making higher highs and the euro dollar is making lower lows. But then when there's a huge economic crash, when there is a factor of the dollar and the yen having this huge impactful state, then it will basically determine that both currencies will go down, just because they are leading currency pairs. And since the 60% of the federal or central rate, or this Federal Reserve rate, has been established by the US dollar, 60% of all central reserves are used by the all other central banks, then we're going to see a determining factor that the market will then have to go into I call it the survival instinct. So then a lot of banks are going to start to crunch down on their consumers, right? And not just that, but their interest in lending money. Everything goes into basically survival state. So then that survival state stops the economy from stimulating, and then obviously we have that decrease of CPI, GDP, and so forth, all these other huge statistical data that comes out every month and every quarter that factors in all of these basically price predictions and where investors are looking to put their money into, right? So that is where we're going to start to see prices going to start to get into that area and so forth. So that being said, moving forward, since we have that availability now where the price is going to go into the downside and then spike up higher, we're going to probably see the same thing with the Great Britain pound US dollar. We're going to see a long position. Since I'm on the weekly chart right now, we saw a huge doji, as you guys can see right here. This huge doji candle has been showing that this has been a lot of price has been opened up. The spread has been open. There's a lot of pending orders to the short side. They've been closed, they've been opened, and then now they're looking to spike price to the upside, closing a lot of these traders that were now selling in the market. We're going to start to see them being driven off price into the higher markets, probably test the 200 moving average. After we see that 200 moving average test, we're probably going to see a shortfall once again before we see an upwards momentum. So that being said, we're going to see a nice upwards momentum, especially if you see a divergence, you guys. If you guys can know what a divergence is basically when price is making lower lows. We can see lower low right here and a lower low right here, and price is now doing the opposite, making that divergence perspective. Even on the weekly chart, you guys, it's like the higher the time frame, the more confirmation you have. So when we see higher time frames, we should see more confirmation. The confirmation on the time frames are showing that a lot of speculation on factored in. So I hope that I can be able to see your guys' comments, because I have the comment stream up. I hope that I'm able to answer any of your guys' questions, and I do have Restream available. So hopefully you guys are putting your comments in the comment section, and I'll be able to answer those as well. Hope you guys are enjoying this video. So that being said, we're going to be seeing the higher formation for the Great Britain pound US dollar. we're going to start to see market price go to the upside, where then we'll start to see that confirmation retest these highs. And then after these highs are available, we want to see that break to the downside, that support level. We want to see that support maybe break down a little higher and then test the break to the upside and see higher levels going into March, April, May, June, where we see that 4 month of that consistent push to the upside or the downside. So that being said, you guys, now that we went over the US dollar, what we're going to see the impactful factors, what we're going to see the implementation in the near future, I want to go over how Bitcoin is going to be established in the near future as well. So since the dollar is going to be having a digress or a reversal, we're going to start to see price then formulate. So I'm going to actually remove this stuff right here, where we're going to see the 800 we have the 200 moving average is showing a lot of support here, where then what we're going to see, you guys, probably in the near future is that price has been obviously going down for about a year now, where we're seeing that pennant, or we can see that bear trap. So what I really want to talk about right now is that this could possibly be the bear trap, right? Or price could then probably test maybe a little lower, consolidate, but then we're going to see the upside momentum, you guys, to probably test possible areas of 11,000 or even higher. But right now, I'm going to definitely be saying 11,000 is going to be our highest point. We're probably going to be checking. We can definitely probably start to see the upside momentum in the early March, April, May area. That's where we're going to start to see areas of the upside momentum for Bitcoin, where then price is going to reverse and start to test these higher levels. I won't say it's going to test and break these previous areas, but I'm going to say we are going to see a nice large momentum to the upside on Bitcoin in the near future. Reason being is that since the Bitcoin has been established in the Chicago Market Exchange, I know I always say that wrong, but it basically the open public market, we can start to see a lot of hedges, or not hedges, but a safe havens, because the Bitcoin is a credible currency, right? It has only a systematically amount of availability. So inflation is going to be a determining factor, because it's not a fiat currency. It's not where you can keep on printing the same thing over and over again. It actually has a limited value, meaning that the price and demand are going to be fluctuated on a better aspect than it is for the dollar, where you can just keep on printing an inflated currency, and all we're doing is adjusting, I don't want to say like DS, which is meant for dog crap, but basically the US dollar is, where we just basically keep on printing a fiat currency, and then using these interest rates and using these political debates and so forth to factor in, like, in our psychological mind, that this thing has such a determining factor, like when it obviously we just as a whole have objectively conformed to this price of the normal. So it's completely it's completely in chaos right now. They're trying to stimulate, they're trying to keep it afloat, but just like every fiat currency, it's doomed for failure over, it might be 200, 300, 400 years, but eventually, obviously, it goes to ruins, right? So right now, we're going to see a lot of changes in the monetary policies and monetary systematical approach to just trading and money, and how it's going to be diversified, and how it's going to be, what is going to be the new normal, right? So that being said, we're going to see the US dollar take a downfall, right? It's been the leading currency for so long right now, but then now that the US economy, I wouldn't say the US economy, I'd say the US dollar in general is going and having it's just been so inflated, right? There's just so much inflation that eventually, like, you can go, it's like a roller coaster, right? Just like you can keep on tick, 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 and then right when you get to the peak, just like we talked about previously in this market psychology, right when you hit that new paradigm, eventually market price is going to have that roller coaster, just like roller coasters have. They have that first drop, and then they have that second drop, and then we go into the fear and capitalization phase, where then the roller coaster of the economy is going to go down and then have that big drop. So that's why we see the U.S. economy on a lot of these pairs, they're having the same semblance, right? They have this first drop, they tick, 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 they go up, that new paradigm, and then the first drop, oh my gosh, and then the second drop, right, you guys? It's just literally the same thing as price right here. So when we're seeing this, we have to take this to understand and adjust to whatever abstract or whatever considerations that market price is going to do, especially when we saw this 500 pip drop in a day. We see a lot of market traps going to be up. So if we do see an upward rise, we know that price is still going to be a downwards because we can see that inflation is still obviously gathering in so much data that we're not going to be able to sustain such an upright economy anymore. We have to have that reversal. We have to have that correction in the economy because that's just due to market price and due to market predictions or market structures that we have to have that that reversal. It's just we have to. It's not even about if and or but. They can prop up the dollar as much as possible, but eventually the universe, how it works is that everything will come into fruition. It's just a matter of time, right? So that's what we're going to see in the US dollar in the future. So we can see that oil price has been seeing that high right here. So then oil price is definitely going to be seeing that spike to the downside one more time to retest those low. So we're going to see the same thing happen, you guys, that we saw previously in 2008. I wouldn't say this is going to be as crazy, but it's going to be definitely a leading factor. But it's not going to be based off, you know, the mortgage or subprime loans or synthetic CDAs. It's not going to be over that this time, you guys. It's going to be based off high actual inflation, determining in so much fraud in the monetary system that we've been having for years and years and years. Propped up market prices, propped up market shares, manipulation, price reductions, price amplifications, right? Dumping money when there's into like, I mean, Donald Trump put $800 billion into, we're talking about paying back this $1 trillion deficit, but then Donald Trump's like, oh yeah, let me put $800 billion into the U.S. Army just because, you know, I'm Donald Trump. Like, what is the moral aspect of this? Why are we trying to say something but then doing something totally different, right? Where's the integrity of this factor? Where's the integrity of the of our economy? Like, there's no integrity. It's basically saying, oh, we're gonna let the middle class take care of all of it because they're the ones that always get hit the hardest. So might as well have them take care of it for the rest of their lives, right? Have their kids and their kids and their kids' kids be slaves to debt and college debt and interest rates and mortgage and so forth, just so they can be able to make these huge non-factual, statistical, or non-structured risks that have no way of being such a factor that's going to help us in the long term, right? This government is not for us; it's against us, but it's trying to say that it's for us because they want to give you guys just enough so we don't have a revolution, right? They'll give you enough to pay the bills. They'll give you enough to, you know, pay the mortgage. They'll give you enough to eat every day. They'll give you TV. They'll give you sports. They'll give you all this other stuff, right? But they're not going to give you enough to like actually be prosperous and abundant, right? You have to go teach yourself this. You have to break down those barriers to create for yourself to achieve that. That's not going to come easy. It comes through hard repetition and over again, trial and error, you know, but then eventually once you start to understand this, then the market you will start to see the benefit of the doubt. So that being said, you guys, that's where price is valuing in the near future, where price is then going to be a determining factor, where we're going to start to see this human faculties of basically reversal aspects, right? Reversal price structures where price is then confirmed that price isn't going to go up any higher, and it's going to have probably retest because, like I said, the market loves to break and retest. We already saw Bitcoin do the same thing. Bitcoin already went to that huge overjustified new paradigm, and then it already retested those breakout lows, right? At 2017, and then the next year does the same thing. So it was just a 1 year cycle, right? So for the US dollar, just because it has more, not sustainability, because I won't say that at this point anymore, but what I will say is that the US dollar has had a lot more history, right? Just a lot more time. So it's going to take a lot more time for it to hit those levels of 2012 because it's $5.2 trillion, right? The Bitcoin's market cap value is in the billions now, right? But it's not essentially going to be $5.2 trillion, right, anytime soon. It's going to get there eventually through time, but right now we're not going to see that as of right now. So that being said, you guys, where price is going to be valued in the near future, we're going to start to see an increase of price range. We're going to see increase of price in general, where price has, or decrease, excuse me, I was speaking ahead of myself, where price has already been increasing. We had 1 level, 2 level, and then 3 levels, and then we had that down, and then now we have that consolidation, and then we have that breakout to the downside where then price is going to drop. So this is why inflation has a huge factor in, you guys, we've been seeing inflation happen for a very long time. We've been seeing just the impact and how market price has been dictating how structure and price has been showing so much volatile action, showing so much spikes right now, because we know that we're due for a correction. So they're trying to basically stem up as much profit as possible before they have to have that minor drop, where then everything comes to fruition, right? So that's where we're going to see right now and considerably in the near future, where price then has showed right here. Price is going to go to the upside, retest those highs, and then maybe drop down to the downside, and then make that M formation possibly, and then maybe retest and hit those lows once again before it drives price back up. But we might see that, we might not. We have to just adjust and see where price is going to be. So hopefully you guys, I haven't seen any comments, so hopefully you guys are putting the comments in the section. Like I said before, I have my chat open, so hopefully everything is running smoothly on my part. Hopefully the video has been streaming perfectly. You guys haven't had any problems. So I do have this available, so hopefully you guys are seeing this, that I'm seeing you guys' chats, because I know that I should be seeing, you know, a lot of you guys be asking questions at this point. So hopefully I'm answering you guys' questions, and hopefully you guys are getting a lot of this video. And going forward, you guys, so we're going to talk about Ethereum as well. Ethereum is definitely making that same determining factor, where we had that basically that new paradigm, and then we had that second drop, and then we see that downwards trend, and then we're probably going to see once again probably test that 500 again. 500 is probably going to be that next retest, and then we're going to see that downwards retest and see that downward spike one more time before we see an upwards market price, right? So this is where we're seeing in these determining factors for price, leading in crypto, leading in the dollar, leading in determining pairs, right? Great Britain pound, euro dollar, right? Australian dollar. We're going to be seeing the same thing, where Australian dollar made that huge spike to the low to trap those sellers, right? Because we saw where previous price was at, trap those sellers, and then now we're going to probably see a spike to the high, where then market price is then going to be stopped out and stop all the traders low that were shorting, and then we're going to start to see an upwards momentum. So price is definitely going to be going to the upside, you guys. Excuse me. We're going to start to see that upside rise for a lot of these different current cross pairs to the US dollar, just because the US dollar is definitely going to be having a turn for the downside in 2019, where they were going to be able to liquidate and profit off a lot of more of these other trends. So that being said, Euro AUD, we took a trade here. We made some profit on this trade. We see a spike to the downside, so we're waiting for another spike to the upside. But as of right now, so you can see that price is now having that divergence, where we see higher highs, but we see lower lows. So right now, we're probably going to see that retrace to the downside. I would say that at this previous structure low, that's where price is going to retest before it continues to the upside to test that 200 moving average to see if price is still compatible for this upside momentum. So we're going to definitely be shorting the Euro AUD right now for the time being. And then we're going to see price going to be moving up to the upside probably after April, later February. So because we're already going into the factor in the lunar cycle, right? So we're already going to be in the second section of the lunar cycle in 3 days. So then the price is going to be coming down here. So that moving forward, you guys, we're going to be killing it with these signals in the upcoming days. I'm going to be having some really nice price action and price predictions, as I've been doing on the Discord on the daily with euro dollar, US dollar, Bitcoin, Ethereum. I've been doing price predictions in the Discord. So if you guys have any questions of where price prediction is going, please feel free to look at that. So as you guys, we see that flag pattern right there, that nice bear trap for that last end, just like we're going to see right here with the Great Britain pound, right? We see that last leg right here of that flag, and then we're going to see that upside momentum, and then we're going to see that cross to the upside as well. So we can already see a lot of these pairs doing exactly what they're going to do based off previous market historical data, and it's so funny that you know, it's just been proven that a lot of this stuff works, right? So now that we're seeing all these formularities and starting to see all these structures and accumulation factors and accumulation to breakouts, we're seeing a lot of these determining factors happen over and over and over again. We're going to start to see these things determine going into a new paradigm, a new shift into the economy, 2019, a new range of percentages gained by the proprietary investors, a new range in the economy, and so forth. We're going to see a huge determining output, and the market is going to be structured differently, where the market price will be valued differently, and we're going to then accumulate and have a different factor. So really awesome stuff, you guys. I'm really excited for, just in general this year. I know that we're going to be making a lot of money with market price, and we're going to definitely be making a lot of great trades to, going with the trend. Obviously not trying to reinvent the cycle, right? If it's not break it, don't fix it. Everybody knows about that saying. It's essentially just go with the flow, adjust your psychological aspect, right? Adjust your market mental behaviors, because then you'll be able to determine what is easier, what is more accessible to you, and then having that nice fluidity, having that nice structure, and so forth. So hopefully you guys got a lot out of this live stream today. And I want to talk about one more thing about inflation before we move forward. So I hope that the pricing and stuff like that, I'm going to have those price predictions in the Discord as well. But moving forward with market analysis and going forth with price in general. So what happens is that basically when we have a $1 trillion deficit or deficit in general, it disrupts the economy, right? So inflation is essentially what happens, we talked about earlier, is when price and demand is too high for price or demand. There's not enough demand, but there's a lot of price, which obviously accumulates into inflation because there's too much, right? It's just like your arteries, right? When you have high cholesterol or you have atherosclerosis, which is basically you have plaque in your arteries, is basically an impact, right? There's too much, there's not enough flow, there's not enough fluidity. And what happens is that when you have that, it causes, the blood to flow, less, right? Which causes myocardial infarction, which is a heart attack, right? But the same thing happens into the economy for the US dollar. When there's too much inflation and there's not enough liquidity, there's not enough flow, right? The market distribution is not at the same polarity aspect. There's not enough demand with price. Then we're going to start to see a recession, right? A recession or a depression, right? Just like we in the early 1900s, we used to, right? We didn't do that, but our great grandfathers or great grandmothers, right, were wheelbarrowing, thousands of dollars or paper dollars to just get a loaf of bread, right? The inflation was so high that there's no system. Like I said, guys, in fiat currency, when you have a fake currency, you have to make up all of these lies to stimulate it, to keep it in congruency with what market price and market demand is showing, right? But eventually all fiat currencies come to an end. And I mean all of them. All fiat currencies come to an end, you guys. So that being said, you guys, that take into consideration, if you guys do have heavily investments into the US dollar, or if you guys are doing US Treasury bonds, I know that a lot of different allocations will be happening. If you guys want to do real estate, great time to do real estate, because there's going to be definitely pricing, new homes sales is going to be going down this year, right? We're going to see the price per value of a home going down. Metropolitan just in general of I'm blanking on the name, right, guys? Monthly and yearly household income is going to decrease, right? So we're going to see a lot of, for home sales, we're going to see a lot of nice investments for real estate, if you guys are into real estate, because this is obviously just a short-term thing, right? Eventually the U.S. economy will start to stimulate again, and we're going to have that nice upwards transition into the 2020 and 2021, 2022, 2023, 2024. We're going to see that nice transition to even higher scales and higher things. It's just, you definitely have to, right? Pressure makes diamonds. You definitely have to have pressure before you have that prosperity and abundance, right? So we're going to see those limiting factors being broken after this nice correction to the downside, and then see that determining factor for price to go up even higher. So hopefully that answers your guys' questions moving forward with what the US dollar is going to be doing, what Bitcoin's going to be doing. If you guys didn't catch that, I definitely believe that Bitcoin's going to be going higher for safe haven, especially against if people are having heavy shares in the US dollar. They're going to be giving it to a non-fiat established investment wheel. So definitely with decentralized and artificial intelligence coming out, and crypto and blockchain becoming a high value market share and marketplace in general, we're going to be seeing a lot of people putting money into Bitcoin, putting money into they're making virtual ETFs nowadays. They're making so many different investment wheels that are decentralized and blockchain network connected that we're going to see a lot of heavily investments into the blockchain networks in general. So that moving forward, you guys, we're going to definitely be seeing some nice momentum to the upside for Bitcoin, and we're going to be seeing a decrease with the US dollar. So I'm actually pretty bummed because I thought that I would be able to answer some of you guys' questions. Hopefully you guys are on this live stream. Like I said, I have Restream up and everything. I don't know what's going on. Hopefully that you guys are getting all of this information. Check the internet. Internet's perfect. So hopefully you guys are getting a lot of these this stuff and my predictions, what market price is going to be going into. And moving forward, I definitely want to be able to answer any questions. Please put on the Discord. Please blow up my Discord messages if you guys have any questions. I'm going to be doing market predictions about any other elements that you guys want. We can go over options. We can go over futures. We can go over other things too as well. We don't have to just talk about Forex and crypto. I want to answer any of your guys' questions, and I'm definitely researching and becoming a better crypto trader as we speak right now. I'm definitely researching and getting more influence and more understanding of how the crypto market works and so forth. I just don't want to be giving you guys false evidence and false things that obviously I'm not really confident about, because I only will give you guys information that I'm very, very, very confident about and that I've done my due diligence, I've done my research and so forth. That's why I'm so heavily educated. I would like to say I'm heavily educated when it comes to currencies and how the U.S. or the countries and economies work due to their market prices and their cash flows. So that being said, moving forward, you guys, if you guys have any questions, please feel free to put in the Discord. Hope you guys enjoy this video. I'm going to be on the same, be actually at 10:30 tomorrow. I'm going to be doing my live stream, so that'll be available for you guys to hope to see you guys there. And if you guys have any questions, please feel free to put in the Discord at this time or put in the messages here. I'm just going to wait for a second, make sure that I answered all you guys' questions. So yeah, it looks like you guys are all set to go. So yeah, I really appreciate you guys being on these streams. I know that I have definitely been less consistent than I was previously due to family, but I can't make excuses for not being on here as much as I should. So I'm definitely going to be pushing it forward and making it a lot more accessible for you guys, and coming out with brand new content and having a lot more things that I want to be talking about in the near future. So I appreciate you guys being on today's live stream. Thank you so much for being patient with me, and thank you so much for subscribing, and all the positive comments I've had in Discord has really been helping me, and it's really made my heart sing. So I really appreciate you guys for being here and helping me out. So moving forward, you guys, hope you guys are killing it with the signals. Like I said, Naeem's killing it with the signals, as I've been trying to do my best as well. Give you guys authentic and correct signals. We definitely been making more money than the last couple of weeks previously, so we've definitely been killing it in the markets lately. So if you guys have any questions there, please feel free to put on the signals or in the Forex or in the crypto chat. I'll be looking at those after this live stream. So yeah, moving forward, you guys, we covered inflation, we covered Bitcoin, where price is going to be, we covered the US dollar, where price is going to go. If you guys want to see this market analysis, I could put this in the Discord. I'm actually going to have to do an attachment. If you guys want this attachment, just put me, just message me on the Discord, and I'll send this to your email, so you'll have this available, because it's already been scripted and it's already been established. So if you guys want this, please feel free. And yeah, so hope you guys enjoyed today's live stream. And hope you guys got some knowledge out of this, and I will be available tomorrow at 10:30 here on Traders Profit Club. So have a great day, you guys, and hopefully you guys kill it with some signals I'm going to be giving later on today, and have a blessed day and stay profitable. Have a good one, you guys.